Hello traders, today is the 1st of August 2011, and a happy trading to you all. For those of you who are new to us, we are the TSTWSYS08 traders, and our website is www.stochastic-magdi.com. For every trade, we'll use a stop loss and apply the 5% money and management rules. Very important. The title of this video is Oversold Fibonacci and Elliott wave. Okay, what is oversold? Okay, Fibonacci. What is oversold Elliott wave? Okay, when we are talking about oversold market condition, we are not talking about anything else than the sentiment in the market. Okay, so it's one thing to have the price in oversold zone, and another thing for the price to be accepted as oversold or overbought. Okay, so when we count the 5 Elliott waves, okay, very important, when we count 5 Elliott waves, at the end of the 5th Elliott wave, the market is considered, okay, after a downtrend. When we count the 5 Elliott waves, at the end of the 5th Elliott wave, the market is considered as oversold. On the other hand, if we are in an uptrend and we count 5 valid Elliott waves without cutting corners, at the end of the 5th Elliott wave, the market is considered as overbought. But we must wait for the price itself, the number one indicator, okay, before we can take a signal, because if you do not have a signal, you cannot buy or sell. That's simple. Do not try to force your intention on the price. So another thing, we can combine the oversold Elliott wave, which is 5 waves. Okay, so we count 5 Elliott waves, and the key Fibonacci level that I want you to pay attention to is 161% Fibonacci projection level, and a 261% Fibonacci projection level, and also the 423 Fibonacci projection level. The most important oversold zone, talking about the Fibonacci, is the 423% Fibonacci projection zone. Okay, when we see the price after a pullback like this and pull up, and we count 5 waves, and also the price has reached the 423% Fibonacci projection zone, we have a double oversold situation, because the Fibonacci is oversold and the Elliott wave also is oversold. Oversold because we are at the end of the 5th Elliott wave. Oversold for the Fibonacci because the key level, we are at the key level. But does it mean that we just buy because we are in oversold zone? That's not. We do not buy because we are in oversold zone. The price in a downtrend will break every oversold zone. When you have a strong bearish momentum, the price keep breaking the support level. You see this one here has been broken, kaput, oversold here, kaput, here again, oversold, support level, kaput. In a downtrend, the price can break oversold level. So it does not mean that you see the price in oversold zone, you buy. No. You wait for a clear cut signal using the price itself, the number one indicator, the stable data, higher time frame, command the lower time frame. Okay, very important. Looking at the USD yen currency pair, this is on my I will use this on a 10-minute chart. Okay, we leave it on a 10-minute chart because I would like to go to 3-minute chart, but we leave it like this. We can see that the price went up to this level. Okay, there was a higher low here, display this high, and then another equal low here, and the price went to this level for the USD yen. Okay, and then suddenly the price pulled back down. Okay, if we go to the 3-minute chart, you will see maybe it's better to look at them. This is since yesterday night. It's a bit messy here, not much to see. So we return back to the 10-minute chart to look what's happening here. You can see that this top here was a previous high, and the price displayed a new high. But look what's happened. The price returned back below the previous high. That's a weakness. You return back below the previous high, you have your line ready here. This is a weakness. There was a high here and a new high. Price return back below the previous high. We wait for a retest. You see, you come here, you retest it, market exaggeration, went above it a bit only to return back a bit. It's not fooling anybody, it's a sell. Okay, and people responded here and it went down big time. Okay, so in this particular case, this is a hidden double top. You see the top and this top. The price shouldn't go to this level, but the market is looking for a better resistance level where they want to sell. Normally from this point onward, people should sell, but the smart money want to sell at a better place, so they bring the price to this level here at 7800, and they sold it. You watch it, you break this level, patience, came back and retest it again, try to go above it, kaput. Okay, so this is in fact, okay, a kind of a hidden head and shoulder pattern. The left hand side shoulder, the right hand side shoulder, and this is the head here. And the neckline, instead of being horizontal, in this case, bear with me. In this case, I will remove. In this case, the neckline is a kind of oblique. Okay, you see. This is the left hand side shoulder. This is the head. This is the right hand side shoulder. Okay, kaput. Okay, so this is what's going on. Okay, but talking about area wave, the first area wave in this particular case is this one here, from here to this level here. That's the first area wave, because normally we should have a double top at this level here, prior when above it. So you can see it just break it down. It break the top now. Okay, so this is the first area wave. Okay, second area wave, third area wave, fourth area wave, and the fifth area wave right here. This line here is a 261% Fibonacci projection of this retracement here. The price did retrace up to this between 50% and 61.8. Call it 61.8, so it went down from here to here, retraced in a zone, not exact level, in the zone of 61.8, and then boom, down to this level here. Okay, and then we have a bit of price struggling to go up to display the fourth area wave, and then finally it come back down to the 261% Fibonacci, okay, projection zone. In the previous video, I talked to you about this Australian dollar currency pair, Australian dollar US dollar currency pair. In that particular case, we count 5 waves, and the 5 waves brought us in a zone of 4 to 3% Fibonacci projection zone. In this case, for the USD yen, we count 5 waves, and the 5 waves brought us into the zone of 261% Fibonacci projection zone, and the price is turning around here. As I told you before, we are not making our decision on the lower time frame. Let's go to the hourly chart and see what's happening here. There is a price turn around here. This is an important price level. Whenever the price changes direction, it's an important level. The target zone came to the important level. This is what we were looking at on the Australian dollar US dollar currency pair, and I was telling you that it will probably continue down, and it did exactly that before it started going up a bit. Okay, so this is just a quick video about oversold Fibonacci, oversold area wave, paying attention to the price itself, the number one indicator, the key Fibonacci level 161%, 261%, 4 to 3%. It does not mean that the price will definitely go down. As I said to you before, we draw all the Fibonacci level 127, 138, 150, 176, 161, 261. Okay, just draw all of them, but the key Fibonacci level that you can pay attention to, 161, 261, 423, together with the Fibonacci level, attention on the price itself, because as I showed you before, there was a bit of exaggeration before for the Australian dollar. I showed you that, and nothing is exact science. The theory does not work in this market. Common sense will work. Okay, so thank you for watching, and we will speak to you very soon. We are the TSTW SYS08 traders. This video is for educational purposes only.